Yeah.
On the web, battleriflecompany.com.
Hey, morning, Facebook folks.
Hi, this is Sam Malone.
All right, 1 minute, guys.
Yeah.
So
yesterday,
we're live on Facebook.
Yeah, that's
Okay.
fine.
All right.
Yesterday, Robert and I got a ton of work done.
Oh, awesome.
Obesity, diabetes,
There are,
men's clinics of
I were to guess, a
America's
few
goals to use the
100,000
technology and
emails that are about to go
treatments
out over
change
the next
your
couple of
life
days.
for the
The
better.
stuff I was queuing up.
713-588-1425.
Awesome.
713
I gotta grab a water real super quick. Be right back.
For your initial visit, or go to the website orlandoterniniMD.com.
As people retire or get close to retiring, many start to worry about making their money last. What they can do to plan for cost of living increases.
Too fast.
Will Social Security even be around? And most important is how to protect what they have from the next stock market crash. If these questions have gone through your mind or you have more, don't miss this free Money Matters Retirement Seminar. Choose Pearland tomorrow, the Woodlands Saturday, or the Galleria area July 19th. Reserve at moneymatters.net. That's moneymatters.net, 800-994-0302. The following program, paid for by Right Path Real Estate, does not necessarily represent the views or opinions of the staff, management, or ownership of this station. It's time to get on the right path with Right Path Real Estate Radio with Tom Perry and Jason Bible. Get the answer to your question that's keeping you from taking action and succeeding today.
Welcome to the show.
Get ready. The guys that will put your fears behind you are on the air now. They're taking calls at 713-785-1817. Toll free 877-881-0271. Here's Tom and Jason.
Hot mics.
Hey, welcome to the show. Right Path Real Estate Radio. 713-785-1817 is the number. It's our weekly show. Jason and Tom in the studio together. Yeah, man, you were going one direction yesterday. I was going a different. I felt like yesterday was a really productive day.
I got a ton of stuff cranked out on our what we're going to announce September 1st. So I was working on all that, getting all that stuff together. And then while I was doing that, it's kind of funny. While I was doing that, I got an email about a deal that we should have locked up today. I mean, sitting there, probably the easiest deal we've done in a while. Or, hey, I'd like to sell my house for X. I'm like, okay, well. What do you think?
Is this the one we already had contracted, or a different one?
This is a different one.
Okay.
So I'm like, well, I mean, what do you think? And so we looked at some numbers, got under contract, and sent it over to Maribel to get the contract signed. So it's like, you can do this while you're doing other stuff. I mean, I was doing real estate related stuff, but it wasn't house buying stuff. So a lot of people ask me, like, can I do this part time? Can I do it with? I don't have 100 hours a week to build a big real estate business. I'm like, you can totally do this. Now, you've got to devote some time to it, but, I mean, it's not impossible to do it, part-time while you're kind of just sitting there. Start working with wholesalers and real estate agents, and especially if you're in our PIN group. I mean, Ryan works individually with folks in our passive
you're
investor
using terminology,
network.
PIN group.
Yeah.
So just wanted that's an acronym for the Passive Investor Network, because we recognize there's a lot of people that are out there listening that have a good W-2 job. They want to invest in real estate, but don't necessarily have the time to find the deals, to do the marketing, do the sales, the acquisition, all that, or maybe not even have the time to work with or vet good wholesalers, all that kind of stuff. And they've got the money and the good credit to be able to go and invest in real estate. So we've put together a passive investor network for people that want us. So I just want to let the audience know, when you say PIN group, that's what we're talking about. That's the PIN group.
Yeah, so our passive investor network, we're going out and we're finding real estate that makes sense as an investment grade piece of real estate. And I'll tell you, a lot of people have told me, oh my gosh, Jason, the market's so hot. The market's so hot. There's an article on my Facebook page. All the hedge funds are gearing up. They're gearing up this year, and they're buying even more real estate, single family real estate. I want you guys to understand something. They're not buying apartments. They're not buying mobile home parks. They're not buying all this other stuff. They're buying single family real estate. These guys have already done all this other stuff. So you got to ask yourself, well, why are they not buying multifamily right now? And why are they instead buying single family real estate. And there's another article came out this week that said homeowners are sitting on a record amount. They called it cash. Better way to say it is they're sitting on a record amount of equity in their personal residences. Why? Because this stuff continues to appreciate. And it's not like 2007, 2008. It's not. People that are getting loans are people who can actually pay them back. There's not a whole lot of new construction going on. There's a huge gap between new construction in 2006 and now. It's enormous, like 50%. So where is all this stuff? It's real simple. It's the economy's getting better. Wages are going to finally start going up in certain sectors they already have. And in Houston, Texas, the crazy thing is our market's counter-cyclical. So even if we do go into a recession nationwide, Houston always seems to do way better than the rest of the nation. Heck, oil is up like 60% last time I looked since its lows. So, I mean, where else do you get?
What's interesting is, here Trump's trying to fight to keep oil prices down, right? Getting OPEC to lower their prices and that kind of stuff, right? And it's good for our economy when oil prices are high. On the oil and gas side, it's not as good on the chemical side, right? But, when you look at the diversity of our economy and what really drives it, it's medical. I mean, healthcare is huge. I was out of the country last week and, went and watched swam with whale sharks. And, the biggest fish in the world. And people on the boat, they were from Mexico City. They love Houston. The dad, I guess in early 60s, something like that, has a very successful advertising or production company in Mexico City. Employs about 1,000 people. He obviously has means, can go anywhere in the world for help, and he's traveled the world. Mm-hmm. He's there with his son and 16-year-old daughter, 22-year-old son, and his wife, and they've been on vacation for like 2 weeks already, spending a week where I was, going another week or 10 days down to another place after, when they get done. And the guy gets cancer. And of all the places in the world, guess where he comes for cancer treatment?
MD Anderson.
Yeah, shocker, right? So it's like we've got, between Texas Children's, MD Anderson, Methodist for heart, it's just, we've got some of the best healthcare, and it's growing. So that's going to be more jobs. And I don't know if you realize this, but people don't quit getting cancer treatments when the country's in a recession.
Oh, that's kind of weird, isn't it?
It's kind of weird.
Well, and
it's kind of recession-proof, right?
And typically, when you look at the commodities market in recession, commodities markets do a lot better when there's a recession, because there's this push for investors to go into safer assets,
right,
which are typically commodities, and so that boosts up the oil and gas market. So here, I don't see. And again, if we were to go back to Dr. Dotzauer's presentation we saw back a few months ago, I don't see how there's any more perfect storm than to invest here in Houston, Texas. Like I don't. What's a better investment? I would love
for somebody to call in 713-785-1817 and say, "Oh, I think that X is, fill in the blank, whatever that is a better investment than real estate in Houston."
Let me explain what an investment is. When you invest in something, and this is Dr. Dotzauer's definition. Invest in something
mm-hmm,
and it must produce cash.
Yeah.
Cash flow, right? What do you know better than the house you live in?
Right.
And is there any difference in the house you live in versus the house next door you buy as a rental property? And I challenge you that there is no better investment than your own neighborhood or your own
we know the
city.
bigger picture. And we may have some listeners that say, "Well, Jason, I live in a $400,000 house in this really nice part of Katy, and I know my house really well, but if I go buy a house in my neighborhood, it's not going to cash flow." So you got to take all that in context, right?
Well, no, I just said it's got a cash flow.
Yeah, right. It's got
What's
a cash
an investment?
flow.
Something and something that cash flows.
Right, absolutely. But I know how listeners think, and like they take, "Oh, well, you said this," and so I don't want people going out and buying $400,000 houses because it doesn't cash flow. It's like you've got to apply all the different things that's being said.
Well,
there.
it depends. What's it rent for?
Right. Yeah. Right.
Right.
Yeah, right.
There are $400,000 houses that cash flow.
Mm-hmm.
Are you buying it with leverage or not? That depends, right?
Right.
However, what I can tell you is there is a neighborhood near in which you live.
Correct.
And you don't have to go to the worst sides of town.
Right.
it's your kids and your tenants' kids probably go to the same school.
Possibly, yeah.
I mean, you could literally, in Katy, literally go to the house right down the street, and you can buy that as a rental property.
Yeah, it's interesting that you bring that up because, the area where I live right now, I mean, there's some really high-end houses, within a half a block or so, maybe a block of where I live, $500,000, $600,000, $800,000 houses. And there are also apartments in that same little zone. So those would be great. And then there's condos in that area. There's townhouses in that area. There's not really any inexpensive single-family houses in that area. So it'd be hard to do single-family to cash flow. But that's what you're talking about is like, could you get the least expensive house in that really good school district and turn it into a rental? And the answer is absolutely. And I was having a conversation yesterday with, you know who I met with. He's in the process of selling a multifamily out in California right now. It's like 48 doors.
For a gazillion dollars, I bet.
It's like $300,000 per door.
That's insane.
Yeah, right. Yeah. So and now he's questioning, and his appreciation has just been massive, and it's never cash flowed.
Oh, never. Oh, I'm sure it hasn't. Yeah.
Right. It's never cash flowed. So, and he's looking at it, when's it going to stop? But he's like, man, at $300,000 a door, it's hard to say no.
Yeah.
2 minutes.
But then he also said SpaceX just is in the area where his multifamily is, and they just got some kind of government contract that they just announced. And he's not under contract yet.
Right,
he's like,
right.
do I hang on to it and let all?
But see, the problem is he didn't build his wealth doing that.
No, he
right?
didn't.
He built his wealth with.
Although he's owned, so actually he built that property brand new 20 years ago.
Oh, you're kidding.
No,
Wow.
he
Okay.
built it ground up 20 years ago.
Which was not worth that 20
No,
years
of course
ago,
not.
right?
Right, yeah.
But if you look at his portfolio, if you look at our portfolio, it's base hits.
Yeah, right.
It's hey, I know this is a good area to
Well, he's held this for 20 years.
Well, that's true. Yeah.
And here's another story. I mean, like some properties you can hold, like this guy that I was with in out of the country, and he bought a piece of property in Cozumel. And he said, Cozumel's got this reef. It's, second or third largest reef in
Right.
the world. See it from satellite, right? All that. And so he bought almost 8 acres on the beach.
Yeah.
And like you can swim out to that reef from his place, and it's completely undeveloped. He bought it 20 or 25 years ago for $130,000. It's his appraisers told him it's worth $11 million now. He's done okay. So he was flying down from where we were down to Cozumel to. He said, if I can get $8 million for it this week, I won't be complaining. Now, some people would call that an investment. Other people would call that a speculation because he was speculating. He was paying full market price at $130,000, and it hasn't cash flowed all this time. So sometimes people look at real estate like that. I mean, there's some people that teach real estate investing that buy on the fringe of the city. I was talking with.
Well, let's go to the break. That's
Yeah.
not really real estate investing.
Correct.
That's really the point.
Correct.
It's not really real estate
That
investing.
is the point, right.
So let's go back. We get back from the break. We'll talk more about this. Jason Bible, Tom Perry, Right Path Real Estate.
Mike saw.
Hey, good morning, Brian.
Hey, how far over did we go on that one, Nikki?
Probably.
Oh, 14 seconds. We're good.
Okay. So we got out just in time.
Yeah.
Are you looking for an investor-friendly general contractor for your investment property? Then call Fast Track Remodeling at 832.
Hey, John, good morning.
9992 or reach us on the web at fasttrackremodeling.com.
Fast Track Remodeling specializes in turnkey remodeling of single-family investment properties. Whether it's a flip rehab or a rental rehab, we manage every aspect of a rehab from start to finish with a highly efficient, standardized process.
Over the last 6 years,
Hey,
Fast
thanks,
Track
Richard.
has
I'm reading that
completed over
article you sent me.
700 projects, which has helped us to create our 3 keys to success.
Yeah, this is very similar to
Use a
the article I
detailed
read the other
scope of
day.
work so that everything gets done, train and maintain quality crews so it gets done right, and complete the work in proper order so it gets done fast.
No more managing it yourself, no more doing the work yourself. Fast Track Remodeling really does manage it all.
So give us a call today at 832-742-9992. Again, that's 832-742-9992, or reach us on the web at fasttrackremodeling.com.
Time is money in a real estate deal. If your insurance company is slow or non-responsive, you could lose a deal like that. You need a quick turnaround on quotes or binders? The agency for that is Benchmark Insurance Group of Texas. The team at Benchmark understands the investor mindset. They know what you need and when you need it. We're here for you. Are you a rehabber, wholesaler, buy and
What?
hold, or flip
I
it?
just got a text from
One of these properties on a single policy will help save
from
you
one of
time
our
and money. Benchmark has
colleagues.
been in business for over
He
10
said,
years.
"I'm just buying
We
Bitcoin.
insure
Rentals are
over
too
30,000
risky."
properties.
You have no idea.
Contact
You two have no
Benchmark
idea what you're talking
for an
about.
investment package. Call us and let us show you what we.
Yeah, I saw an article about that. It's just come out that a study, one of the colleges did a study, statistical analysis that says that Bitcoin, they can tell that there's price manipulation going on.
No.
Shocking, right? Yeah.
No.
Yeah, right.
You know that a very similar study came out about 4 years ago about LIBOR.
Yeah.
And now a couple of those guys are in jail.
Wow.
Because they could tell, and they think the gold market's manipulated too. So it's, you know, when do regulators finally get off their duff and put some of these guys in the pokey?
Legacy Mutual Mortgage. Our goal is to give our borrowers and referral partners an amazing experience during the loan process. My team believes in putting people and culture before results. Our company concentrates on building those teams who operate with structure, process, and recognition for going the extra mile for you. This way, we have the energy to make this your best home purchase ever. Give us a call today to find out the simple steps to get started. I'm Jennifer Hernandez, the Hernandez team at Legacy Mutual Mortgage. Jennifer.legacymutual.com or call 713-579-3611. Again, jennifer.legacymutual.com. We can't wait to consult with you soon. NMLS 514497.
Equal housing
How did I get
opportunity
linked
lender.
in this thing?
NMLS 514497.
All right, 1 minute.
Hello, real estate investors. Do you
Yeah,
need
a
lender
Bitcoin
who
price
has
manipulation
fast and
probe
speed of
launched by the
fund your
Justice
investment
Department.
properties? Jet Lending will help you purchase properties quickly with as little cash out of pocket as possible. Jet Lending also sets up a repair escrow fund to help you with repair costs. Jet Lending has originated over 2,000 loans in Texas, valued at over $250 million. Jet Lending will help you evaluate your deals for free and give you feedback on value, cost of repairs, and potential loan amount. Jet Lending is your fast and friendly hard money source for first-time investors and seasoned professionals. Call 281-872-7800 or email us at info@jetlending.com. Oh, and don't forget about our famous
Yeah,
Third Wednesday
a paper by
Super
John
Investment
Griffin, a
Network
finance
meeting.
professor at the
Lots
University of
of
Texas,
fun, lots of great real
and
estate
Amin
talk.
Shams, a graduate
We'll see you
student,
there.
was released Wednesday. Much of Bitcoin skyrocketing gain last year was caused by covert actions of a few big players rather than a real demand from investors.
Uh-oh. I was like, uh-oh.
That was a little longer delay, wasn't it?
We just broke the radio.
All right, gentlemen. Here we go. Hot mics.
Welcome back, Right Path Real Estate Radio. We're talking changing your financial future through real estate.
And it's literally just as easy as buying the house next door.
Yep, it is.
It's really not that difficult.
And then
Now,
it's lather, rinse, repeat.
yeah, and it's do it over and over and over and over and over again for, you know, one of my buddies, Casey, says, he says, rinse and repeat until rich or bald. That's what he says. It's just lather, rinse, repeat till rich or bald, man. It's up to you. And I'm like, oh, that's great advice, right? So till you're too old to do it anymore, or you're wealthy, and likelihood of you being wealthy at the end of this thing is pretty high. That's why, you know, this reminds me. I was having a conversation with Rob yesterday, and we were talking about some of the how can I put this? Some of the drama that I've been drumming up the last couple of weeks on Facebook.
You've been trolling.
I've been trolling. I've been doing a little trolling.
Yeah.
And what I realize is that there is only 4 ways this business works. That's it.
Yeah.
And there's really only 2 ways to create wealth. The idea that you can go to a class and there's 1,000 different ways to make money in real estate is really let's just be honest, it's a lie. Now, can you make money doing these certain strategies? Yeah, I'll never forget. I was on a conference call one time, national webinar thing. Like everybody that was a student is on this webinar. And this woman starts explaining this deal she's doing. And her case study was, it was crazy. She made a ton of money. And I asked a simple question, well, how did you get that deal? And she said, well, it was like my sister's cousin's best friend twice removed that her parents died or her grandparents died. And I'm like, okay, that's scalable.
Well,
right?
maybe they
Like-
have 100 more.
Yeah, maybe they got 100 more of those people. I'm like, well, that's
Right.
not really scalable.
Right.
And then she said, they really didn't care about the house. The seller did. And I was like, well, why not? Well, they had one of these cars, evidently a Shelby Cobra. Have you ever heard of something like that? It was like one of the last remaining Cobras they haven't found, and he was the original owner. And I'm like, oh, there's a $250,000 car at least sitting in the garage. So they really didn't care about the $60,000 house. I can't imagine why.
Yeah, right.
So if you go out and target...
Yeah, the house is kind of a rounding error.
It's
on
a
the
rounding
car.
error at that point. And it could be $1 million car depending on the specs and all that other stuff, right?
Right.
So it's like... So you could build a business around people who are in probate, who've inherited houses that have Shelby Cobras in the garage. And I think they made less than 700 or 800 Shelbys.
Yeah.
So and they found just about all of them. So that's a hard way to reproduce wealth. Much like your stories about, the guy that bought 8 miles on the beach or 8 acres or whatever, it's on the reef.
Right.
And the deal about, the friend of ours that built that multifamily in California. I mean, those are great stories.
Yeah.
They make great case studies, but it's not repeatable, right?
Right. Yeah.
So this month's case study, we're going to talk about a family that is in our base camp group. They're members of Right Path. And they're going to talk about how they just contracted number 28, 29, and 30 last week. And they've built, I don't know, how much in wealth did they build?
1.2 million in ARV. Their rehab. Let's see, it's about 300 and something thousand. If I'm doing the quick math.
Let me take a look here. I got the sheet sitting in front of me.
740 plus 160 is about 900, right?
So in the last 18 months,
about
it's a little less than
300,000.
18 months,
300,000 in equity capture.
$300,000 in net worth, and $3,600 a month in cash flow. So over the 18 months, they've added $43,000 a month, $43,000 a year in cash flow, and we estimate their first year of appreciation of about $100,000. It's like, and that's repeatable.
Just
You
got a
can do it
text
every single day
from
Yep.
from our case study clients.
Oh
Just
my-
got
they're listening.
31 and 32 yesterday.
Oh my gosh. Okay, so last week we printed out the flyers because we're going to all these events. Hey, come to this case study, right? So I see she posted on Facebook, hey, we just got 28, 29, and 30 contracted. She just sent us a text message and said they just contracted 31 and 32. That's 31 and 32 houses.
Yeah.
Houses.
Yeah.
I mean, they are just doing it at a very high level, and it's totally repeatable. It's a family. There's really 3 of them in the family that are doing this. But that's our case study for this month. If you guys want to see how to build wealth, and you don't have to be a gazillionaire to do it, it's just a regular old family just like anybody else, right here in Houston, Texas, not doing anything exotic, right? Just buying single family, following the process that we teach in our weekend retreat, that we teach to our members, right? It's just day in, day out. And we've got a ton of these stories, right?
This can be lather, rinse, repeat. This is not one of those one-off stories, bought something 20 years ago, just happened to be in the right place. I'm sure somebody 25 years ago bought the land that now the Grand Parkway goes through, right? And he's selling off like retail. But that's, can't go get a deal on that acreage now, right?
Yeah.
I mean, that's... And then all this time, it's not been cash flowing, right? They've stuck some cows out there just to minimize their holding cost on taxes, but that's really not duplicatable. That's a place to park a bunch of money, but that's not a real. It's a speculative investment.
It's not for it will not work for most people.
Yeah, right.
What's one of the reasons why so many people can't even get into multifamily real estate investing? When you look at multifamily, there's less than 10 multifamily deals on the market in Houston, Texas, or less than 10 that close.
Yeah.
So
I think the last number you looked at, there's
like
about
7.
seven
Yeah,
a month.
7 a month. How are you going to build wealth with 7 a month?
Yeah, we talked to probably 10 a day that say that they want to buy in multifamily.
Well,
right?
we'll be in Dallas tonight, right?
right.
So if you guys are in Dallas, we'll see y'all tonight at Gillies. Get there at 6:30.
Right.
So we'll be in Dallas tonight. There'll be 200 or 300 people there. And usually, if I get on stage or you get on stage, one of the questions I like to ask is, how many of y'all think you're going to get rich with multifamily? And everyone's like, yeah, woo, let's do it. And I'm like, well, 300 of you guys are fighting for, and in Dallas, it's probably 5 deals a month.
Yeah.
You're going to fight over 5 deals a month. How are you guys going to get
Well,
wealthy?
and it's not like they're the only ones wanting to
Right.
get into multifamily, right? Not just the people in the
Yeah.
room, because there's hedge funds and all that have a lower cost of capital.
Right.
That's really what it comes down to, is how low is your... If you've got basically free money, then you can make that work. But for the average everyday person, somebody that's, that's got some savings in a 401k or an IRA, you can take that investing. And what if we could show you a way that you could make safe and secure? I mean, it's not 10%. It's not, but with leverage, you can make 30% per year. And when I look at, I've known people that have made, like, oh man, my portfolio is up 30% last year, from, beginning of last year to the end of last year. And I think in the market, how much risk is that?
Well, let's actually talk about that. Yeah, your portfolio is up between when Trump got elected and January. What is it from January to now?
Yeah.
It ain't great.
It's down, right?
It's not great.
Yeah.
And back to your point, what's the risk?
Yeah.
I had one of our guys who owns hundreds of rental properties. He's been in this business over 20 years. And he sent me a text. And he said, "You guys don't know what you're talking about. I'm buying Bitcoin." He was joking, by the way, for those who don't get sarcasm, right? He was joking. He's like, "This is ridiculous." Yeah. And so when you add a risk-based approach to how you're generating wealth, I don't see how you continue to invest in the stock market. There's a story out today that stock buybacks, equity buybacks, are going to be astronomically high this year, in part because of the tax issue that was passed at the beginning of the year. So then you got to ask yourself, well, why is the market, quote, up? And it's because companies are just buying more of their stock back.
Yeah.
Is that really, does that mean that piece of Chevron or piece of Amazon or piece of Apple is worth more because the company's doing more business and is more profitable? No, it just means there's less supply of it. And at the end of the day, do you really need to buy Apple? Do you really need to buy Amazon? No, but everybody needs a place to live.
Right.
And that's the reality. People are moving here for jobs, right? And that's not going to stop anytime soon. So for those of you who are trying to figure out, how am I going to retire in a couple of years? How am I going to retire in 10 years? I got all those numbers too. If you want to retire in, 15 years or less, and you don't have anything saved up, you're going to have to save 50% of your income. Let me pull the numbers up. I don't have them memorized.
The problem with that is that most people can't live on 50% of what they're earning, right? Their lifestyle is greater than 50%. I mean, most people are doing really, really well if they can save 15 or 20% of their annualized income.
If you are starting with zero retirement savings right now, in order for you to retire, you have to save 45% of your take-home income. And there are people that can totally do that. We could totally do that, but most people don't make the kind of money they need to make to be able to do that. So the reality is, even if you're saving 15% of your income, yay, it's going to take 43 years to retire. So you've got to invest in something that gives you higher rates of return.
That's assuming that you want to live on the same kind of income that you're making on your work. And now, some people, what they recognize is as they get closer to retirement, they don't have a house note anymore. They won't have a car note. Some of their expenses go down, so they don't need as much to live on, and they're counting on a boost from Social Security to make up some of their income. But it's like, man, talk about speculation.
Yeah. Yeah, you're speculating on daddy government. I find so fascinating because obviously we're here in Texas, a lot of conservative people, a lot of Republicans, a lot of libertarians. And when they tell me things like, I'm investing in the stock market, I always say, do you have any control in that?
Yeah.
1 minute.
You are praying that daddy stock market is going to get you to retirement. You're praying that daddy government is going to give you that Social Security check. And you're praying that daddy job, your company, is going to need you 5 and 6 years from now. If there's any one story I've seen in my lifetime, it's that there's no more working somewhere for 50 years, getting the gold watch and retiring. That's gone. In fact,
that's been gone for 20 years.
It's been gone, yeah. And a lot of the high-earning professionals, even in the engineering industry,
right,
when they start making big money, y'all are the first to go, and you know it.
Right.
And if you don't have that plan B, you don't want to figure out plan B when you're in plan B, right? And
Correct.
you don't have plan B.
Yeah.
So let's start doing this now. Let's start investing some of our time and dollars in real estate for retirement and independence from your job and those sorts of things. We get back from the break. We're going to talk more about that. It's Jason Bible, Right Path Real Estate.
Mike's off.
You found or inherited a great investment property. Problem is, you don't know how much it's worth, or more importantly, what to do to maximize
Man, I
your
haven't had a
investment
spark
while
in, like,
mitigating risk. This is exactly
I don't
why
know,
we
2 months?
started
Oh, yeah?
Next Gen
Oh,
Appraisal.
jeez.
Next Gen is a group of
Whoa.
appraisers specializing in investment real estate. We understand that investors aren't just looking for a number of what their property is worth, but a comprehensive analysis of the market. Give Next Gen a call.
Oh my gosh, I'm reading the advice in this group, and I'm like, what are you? Oh my god.
Or check us out online at Next.
This is the kind of stuff that gets me in trouble, because then I'll just do a Facebook Live and I'll say, you guys are all wrong if you do it this way. They're trying to stop a foreclosure.
Yeah.
IRA to fund all of your
my
deals.
God.
Well,
Why don't you just catch up the
Quest
mortgage?
IRA
Yeah, that's
is
a real
based
great
locally
idea.
Here in Houston, Texas. At Quest IRA, we offer retirement accounts that can be used.
They're talking
to
about filing
invest in
bankruptcy
real
and all that
estate,
other stuff.
promissory notes,
Well,
private
yeah, and they're
entities,
talking about, well,
and
one
much
way to
more.
stop it is you
Many
could just
of our
catch the
clients
mortgage up
loan
for
money
the
from their
seller. I'm
IRAs
like, that's
to
a
fund real estate
real
deals
stupid
all
idea.
over the country.
The seller
We don't
walks
sell
and you've
any
got no
investments or
recourse.
give advice. However, we do hold free networking events, weekly educational classes, and free consultations with an IRA specialist. For more information, visit our website at
for those of you in Facebook
questira.com
land,
or call us
one
at
of the reasons we joined all those different real estate clubs
is
is because A, if we picked up 1 or 2 tips that made us a couple $100s a deal, that goes right to our bottom line. That's a big number. But the other thing is, if we just don't make a mistake,
Yeah, right.
it's stuff like that. That's a $40,000, $50,000 mistake.
Hi, Clint Coons here, attorney and avid
Good
real
luck,
estate
buddy.
investor. You know the greatest mistake
Oh, looks like
real
Dean's
estate
on here.
investors make is not understanding the potential liability that exists from owning real estate.
Morning, guys.
Anderson Business, Legal,
Morning,
and Tax
Dean.
Advisors, we specialize in protecting real estate investors in all 50 states. In addition to structuring your business for optimum protection, we provide guidance so you pay the least amount of taxes available under the law. We have 150 employees that range from lawyers to CPAs to estate planners and much more. Download our free ebook, The Invisible Investor Strategy, today at AndersonAdvisors.com or call for a free risk reduction analysis and financial blueprint at 800-706-4741. Anderson Business Advisors will help you keep more of what you earn. Call us today at 800-706-4741 and mention Right Path Real Estate.
Do you have cracks in your brick, doors that stick, or sheetrock that's coming apart? Then you may have foundation movement. Due to our expansive soils in the Houston area, it's probably not a question of
Oh,
if you
some
have
friends of
movement,
ours did a
but when.
14er
Call
yesterday.
Foundation Check for a truly
Their first
independent,
14,000
unbiased foundation evaluation. Foundation
foot
Check
peak in
has been
Colorado.
business since
Oh, nice.
2009 and has
12 and a half
completed over
miles, set to 10
1,400
hours.
Evaluations. We're not in the business of repairing foundations or selling you unnecessary pier work, but we are in the business of evaluating your foundation. Our product is designed for house flippers, landlords, or even owner-occupied properties. Each of our files is reviewed by a licensed engineer. Remember to check before ever repair. Call 346-702-3825. That's 346-702-3825. Or you can reach us online at foundationcheck.com. That's foundationcheck.com.
Are small returns
30
getting
seconds,
in the way
guys.
of your
Okay.
retirement plans? Why settle for mediocre results? There's a better place to invest. The experts agree, single-family real estate is one of the best investments you can make. Find out how JB Fund Services offers a 9% preferred return and up to a 13% waterfall. Call us today at 281-915-0906 or visit our website, jbfundservices.com. That's 281-915-0906. This investment is offered to accredited investors.
This is Business 1110.
All right. Oh, I'm training, so the next break you're gonna hear a different voice.
Ooh,
right.
So, all right, fellas, here we go. Hot mics.
that's exciting.
Training.
Training. We got some training going on in the booth.
It's my birthday.
Oh!
It's my birthday.
Oh, we
It's
gotta
Nikki's
sing.
birthday.
Happy birthday to you.
All right, that's
Happy
enough. Thanks,
birthday to you. Happy birthday, dear Nikki. Happy birthday to you.
Nikki's 23, everybody.
Go Stros, go.
All right, moving on.
All right, welcome back.
Are you blushing?
Yeah, I can see you blushing from here. So,
Right.
Welcome back to the show, guys. Talking about real estate, obviously, today. And I'm racking
So much for this one ever being a best of, right?
Yeah, this one can't be a best of show because now we're...
Now we ruined it.
Yeah, can't be a best of show because we're going to be singing happy birthday at the end of the break, or the beginning of the show. So, in any case, to go back to what is it that you've got to have this plan B. And I'll tell you, just if you really want to scare the snot out of yourself, just go to Google and type in retirement and poverty. And what you'll find is that most Americans retire in poverty. And they're praying that daddy government saves them. Please, oh, Mr. Government, give me my COLA adjustment for Social Security. And I get it. And I'm making light of the fact. And it's not funny, to be completely transparent. It's sad. Because the problem is we have so many Americans that failed to plan for retirement. Now, you can blame the politicians. You can go protest. You can go stomp and scream in your HR office. You can do all of that stuff. However, it's not going to fix the problem. Fixing the problem is taking command of the problem, taking responsibility for the problem. And it can either be your responsibility to fix your retirement or it's not going to get fixed. It's that simple. If you're relying on someone else to take care of you, I mean, you're literally giving your control to somebody else. I can't control what goes on in the market, right? I can't control the trade war that allegedly is about to break out with China that's going to affect the stock market. I can't imagine how some of you sleep at night knowing that you're 5 or 10 years away from retirement or in retirement and watching your account every day. What's going on in the stock market? Oh my God, Trump's going to pick the wrong person for the Supreme Court. It's going to impact the market. I can't imagine living that way. And you do it because you just, I don't know, maybe you like torturing yourself. The idea is that you need to take control of what you can take control of. And I can tell you, I've got more impact on what happens in my community than I ever will what happens in the world. I would much rather invest my dollars and invest my time locally building my wealth and income that way than I ever would reading about the foreign policy of the UK and the Brexit and what's going to happen to the market. And are the stocks and bonds that I'm invested in going to have a negative impact on? I mean, I just can't imagine living that world. It's so much less risk, and I have so much more control over buying a single-family house that's 2 miles from where I live, that is in the same school district that I go to or my kids go to, and it's in the same city that I know. Like, that's so much less risk for me to invest in than it is in these
because you know the neighborhood.
I know it, yeah.
You know what the traffic's like. You know what the people are like that live there. I mean, you know if there's, what the crime situation is there. I mean, you know it.
And you know all the companies there.
Right.
I know all the companies that are hiring. I know all that stuff.
Yeah, you know the development that's going on. You feel the vibe. Every city's got a vibe, right?
Well, and
there's a vibe. When I went to Wichita Falls,
yeah,
because we bought a house there,
yeah,
there was a certain vibe.
You got the vibe there in Wichita Falls.
Yeah, it didn't take long. It was a lack of growth vibe.
Yeah,
yeah.
And it's one of the reasons I started the Sugarland RIA, right? It's like we're sharing this local intelligence of what's going on in Sugarland, and we're buying houses in that little, in that little area. Well, we all live there too, so it makes so much sense to do some of this stuff locally. Now we do it really locally, right? I mean, we're in, Sugarland and kind of the Katy area. I've got some stuff in Bear Creek and all, and so it's like that's the idea: is you're invested in this little community. Now, the first thing I hear out of people is, "Oh my gosh, Jason, what you needed to diversify." I'm like, "Really? You sure you need to diversify?" Because the wealthiest guys I know don't diversify. They don't. Go read Diversification and Warren Buffett. Warren Buffett occasionally...
Diversification.
Well, one of the things that Warren Buffett does is he occasionally lets the secret out.
Yeah, occasionally.
And occasionally he says stuff that is true. I shouldn't say he's a liar, but the way he says certain things, he's looking for a certain response. And he will say Diversification is protection against ignorance. And then he'll say, if you know what you're doing, you don't need to diversify. And he's absolutely right. He hasn't diversified. Now, in the last 30 years, he has, because he's got so much money. But even then, does he really diversify? He goes and buys an entire company. That's another thing when I hear people that'll say, oh, well, Warren Buffett invests in the stock market. No, he doesn't. He goes and buys all the shares to control the company. That's a completely different way of investing. You're not doing that.
Well,
through your
remember,
401k.
he for a long, long time, he always said that he wouldn't invest in things like technology. Because, he knows people are going to be drinking Coca-Cola 20 years from now, but he doesn't really know, that HTC will be making cell phones 20 years from now.
Right.
And I was reading an article this morning about HTC, and they're struggling. I mean, I don't know if you know that, but they did 2 million units. In the first quarter of last year, they did like 600,000 this first quarter of this year. So and then that's what he says, is how do you pick a winner and a loser? He said, he's good friends with Bill Gates, right? And he's saying, but I don't know, Microsoft's going to be around in 20 years, right?
Yeah.
That's because you don't know. I mean, they come and they go, and who knows? He knows people are going to be buying furniture 20 years from now. They're going to need a place to sit, right? So all that's to say that
although he bought a bunch of Apple.
Yeah, he did, and that's where I was going with this.
Yeah.
For the very first time, he's bought Apple, and he bought what is it? I think he owns 4% of it, something like that.
Something ridiculous.
Yeah, I mean, to have 4% of Apple, which he doesn't have control over it. But he's buying in the cash flow. Apple's throwing off about $1 billion a month in free cash flow. So he's really looking at, just on a liquidated cash flow basis, it's a pretty good deal. And so that's what he's looking at. When you look at evaluating a business, I remember looking at one time, there was a stock market crash, and there were companies that you could literally buy the whole company for less than book value. Like Hartford Insurance. Well, I remember when Hartford Insurance at one time dropped to like $7 a share, and you're like, when you look at how much cash they've got and the assets they own, it's like it's worth way more than $7. So there are opportunities, but that's not something you can invest in today. On a consistent, regular basis, you can go right now. Can't do it in California. Can't do it in New York. But you can do it in Houston, Texas. Buy a single-family house that is worth less than, you can buy it for less than what replacement cost is on it. You can buy a 3-bedroom, 2-bath house in a lot of good neighborhoods for about $150,000 that rents for $1,450, $1,500 a month. That even if you paid full retail and you borrowed 20% and had 80%, if you can do that over and over and over again, you're creating massive long-term wealth.
Yeah, I mean, replacement cost right now is $125 a foot, not including the cost of land, right? So if you're buying houses in again, it's got to be in good neighborhoods. Yeah. There are places that will always be low end.
There's a neighborhood that I can think of south of Loop 610, and sometimes new construction goes in there, and a house will sell for $200,000, and then when it tries to resell 2 years later, because people they get into one of these first time home buyer programs, things like that, they get behind in the mortgage, now they need to sell. 2 years later, that house sells for like $140,000. So it's not like it's appreciating in value. We're not saying buying those neighborhoods, and it's easy to know if you've been in Houston a length of time. Neighborhoods that you'd want to live in yourself. Even there are $150,000 houses that are still safe neighborhoods to live in, right?
Well, yeah, just drive through the neighborhood, and there are cars parked in the yard, and there are houses that are burned down. Or my favorite is, you hear this from the real estate gurus, go to neighborhoods where the windows are boarded up, and those are good deals to buy. I'm like, really? Because I can tell you, in any neighborhood I've lived in, and in a lot of the neighborhoods we invest in, if the windows are boarded up, the HOA shuts that nonsense down in about 5 minutes.
Right.
Those are not the neighborhoods you want to invest in. You want to invest in the neighborhood you drive through, and the grass is cut, and the houses look nice, and the cars are up, kept up, and they're not on blocks in the driveway.
Yeah.
I mean, that's what
good working class, salt of the earth kind of neighborhoods. So
that's what you need to be invested in. And here's why. We know those neighborhoods over the long term appreciate.
Yes.
They absolutely appreciate.
Yes.
As much as everyone dislikes HOAs from time to time, they do a great job of maintaining the value in your neighborhood. That's one of the things I like about HOAs. And in Houston, we've got incredibly powerful HOAs because we really don't have any zoning, right? So the HOA, which is a community of folks that live there, are ensuring that the neighborhood doesn't go to pot, right? It's nice. People don't park on the yards, and that continues to increase that value. And then because the neighborhood is nice, it attracts tenants and buyers, homeowners, that are also involved in the school. It amazed me. I was at the natatorium yesterday for Fort Bend for the swimming, and the natatorium's got to be 35 years old. But you know what? There's not a speck of paint that's out of place because it's been nice for 35 years because everyone is so involved in that community. And those are the areas of town that you want to be invested in. Not the stuff that's all fallen down in a nightmare. That's not for you. For long-term wealth, it's nice neighborhoods. We get back from the break, we'll talk more about building your wealth and income with real estate. It's Jason Bible, Tom Perry, Right Path Real Estate.
Reminds me of a story that...
Mike's off.
And you're going to put them in queue and like access?
Yeah, dude, it's crazy. I go in there. It's like anytime I go to the kids' school, I walk. These buildings are they're almost 40 years old, and they're pristine. I love it.
So there's this park right across the street from where I live, right?
Mm-hmm.
And then there's a school behind the property where I live, and there's a walking track. So there's a walking path around this park, and I can walk on that path and get to the school, and there's a little pass-through gate to get to the walking track, right? Well, one time I need to go to the bathroom, and there's 2 Little League baseball fields that are right there. I mean, and when you look at, you know what Little League baseball fields look like. There's a dugout, and it's a wooden bench, right?
Right.
This has got like a metal bench that's coated, paint, and I mean, it's like... And then they've got like a bathroom there, right?
Yeah.
Well, they normally keep the roll down door because they can lock it up so when there's nobody.
Right.
So
there's no vagrants in there. Yeah.
But I mean, you walk in and we've all been in truck stop bathrooms and stuff like that. They're not necessarily stellar, right? Except for
Buc-ee's.
Buc-ee's.
Yeah.
Buc-ee's are clean.
We'll be there today.
I tell you what, you walk in this public restroom that's off a park.
Yeah.
I mean, they had a Dyson hand dryer. I mean, you could have eaten off the floor. I mean, there were no spiders. There were no, the stainless steel toilets were crystal clean. I mean, it's like unbelievable. I mean, it's probably cleaner than my own bathroom in my townhouse. And I keep my place nice, right?
Right.
But I was like, unbelievable.
But that's where you want to invest.
Yeah, right,
right?
of course. And you're like,
all that.
yeah, this is a wealthy neighborhood.
Yeah, it's a good neighborhood.
Yeah, good neighborhood. Yeah.
And even the people in those apartments, even the people that are not in the neighborhood, they use that park, they don't trash it.
No, they don't.
It's nice.
Right, yeah.
So why go after all the... I love the guy. There's one of these gurus that teaches... Well, Robert's teaching me to say this. I don't know what those other guys teach, but here's what we teach, right? That's what he's trying to get me to do.
Right.
So... what I have heard out there is there's this proprietary algorithm, and we know exactly what neighborhoods. I'm like, yeah, it's the neighborhoods I can walk in, and I'm like, this is nice. I need to buy a house at a discounted price
in a nice neighborhood.
In a nice neighborhood.
Yeah.
What people don't realize is they're trading discount. They're confused about discount to quality versus getting a discount.
Yeah.
So they assume that the assets are the same. For example, let's say a 75 or 80% deal in Katy versus a 65% deal or 70% deal in Cypress. And I get it. People live in both, and both those are good neighborhoods. But I'll tell you that house in Katy is going to appreciate much more than the house in Cypress. I mean, it's just the reality of it, right? So, and it's not like Cypress or Spring's probably a better example. Like Spring to Katy, Woodlands to Spring. If you start comparing some of those other areas of town, Channelview to Crosby. I mean, you start to see that, and you assume that, because it's a 70 or 80%, like they're like-kind assets we can compare. They can't compare those. We got to come up. Maybe that's what we do with the PFV. We put a modifier in there for appreciation for the PFV. Here's the 5-year. Here's the 7. Here's the 10.
Mm-hmm.
Time is money in a real estate deal. If
1
your
minute.
insurance company is slow or non-responsive,
Because that's the only way to... Let's go back, and we can pull it from HAR now. We can pull from Matrix what the historic appreciation is.
the team at Benchmark understands the investor mindset. They know what you need.
Heck, you could graph it too.
Call Houston's leading real estate risk management experts, Benchmark Insurance Group of Texas, 281-569-4353. That's 281-569-4353. or online at benchmarkbroker.com.
So Brian says, interesting
30
perspective and agree on neighborhoods. The boarded up neighborhoods being revitalized are great fix and flip opportunities. I don't know. We don't do very many flips in those areas. Our flips are just in nicer neighborhoods with houses that are all torn up.
Call us today at 281-915-0906 or visit our website, jbfundservices.com.
If he's talking about in neighborhoods that are like where the height on the edges of the heights or things like that, or even in neighborhoods like Oak Forest or Garden Oaks or things like that, where it's established that's if you could buy a boarded up house in those neighborhoods, yeah, but that's different.
East End, I don't. I like buying rentals in those markets.
Yeah,
truth be told.
Yeah, because they can cash flow, right? You can buy them cheap enough, and people want to live there. Yeah, we're coming back because we are the champions. Are we back?
Hi, Mike's.
Okay, cool.
Oh, good.
Hey, welcome back. Right Path Real Estate Radio. We're in our last 4 minutes to go in the show. Jason and I will be live in Dallas at Gilley's tonight. So that is on the southeast side of downtown Dallas. And if you're in Dallas, Dallas Fort Worth, I mean, if you're in Fort Worth and you're not in our event and you're interested in investing in real estate, then you're missing out. I mean, that's the bottom line. I'd say if you're within an hour and a half drive, I mean, that's Tyler, that's all of those areas. You need to be at Gilley's tonight.
Free beer, free food.
Yeah, free beer, free food, and good technical content.
Yeah.
We're going to be talking about, it's going to be, Jet Lending will be there talking about, money. But some people, I don't know the money to invest in, but the money's never the problem. And then Texas American Title will be there, patent law firm. They'll be there. There'll be lots of other vendors there that are people that you can use to assemble your team so that you're in business for yourself but not by yourself. So you want to be at Gilley's tonight. And then our next weekend event, and people say, well, how can I learn more? Is there more in-depth training? Yes, we do. Our next weekend event is going to be Saturday and Sunday, July 21st and 22nd, where we go through the formulas that you need to know and how to pick out the right neighborhoods and talk about appreciation. We talk about marketing. We talk about sales. We talk about all of those things. And we talk about if you want to do it actively and what the advantages are and what the pathway is to do that. And then we also talk about if you want to do it passively. Some people say, I really just want to invest my retirement money is what I want to do. I want to keep working at my job. I don't really want to build a real estate business, but I want to invest, in real estate because I get the concept. I mean, I don't know of any better return when you compare it to the amount of risk that you're taking on. Minimal risk, maximum return. You're really looking, I think, in any investment. What's the delta? What's the difference between what's my potential risk? If I'm taking on 20% risk and I've got a 30% rate of return, my delta is 10%. So I think if you could ever quantify what's that risk versus the reward,
1 minute.
when you look at what's the risk on real estate versus that. So go to rightpathrealestate.com. We also want to tell you about on our calendar the case study event, which is going to be July 19th, where you're going to be able to see an actual family. They texted during the break that they've just bought house number 31 and 32 since they got involved with us. So really excited about that and the success they've had. So our success is powered by your success. So we want you to succeed. You want to learn more? Go to rightpathrealestate.com. Thanks for listening, guys. You have anything to add in the last 30
that'll
seconds?
work. Yeah, come on out.
Yeah, come on out. We'll see you at Gilley's tonight. Going to be a lot of fun. 6 o'clock at Gilley's. And see you live. Woo!
Thanks, guys.
All
Mike's
right.
gone.
Yeah, thanks.